In this video, I'm going to talk about what a top-down analysis is and how this is very important both for your daily bias and when you're taking a trade entry on the lower time frame. But before we get into the video, if you'd like to engage with other traders, you can join my Discord. Link in the description is totally free. So now let's get into the video. So now, what is a top-down analysis? A top-down analysis is where we use higher time frame PD arrays and higher time frame confirmations and bias on the lower time frame. So let's say we start on the daily, then we go into the 4-hour, 1 hour, and even lower down to the 5 minute. And we also use higher time frame for bias, of course. So let's say we're in an intermediate term uptrend on the higher time frame, then we would most likely take bullish trades on the lower time frame. So now let's get into the video. What are we seeing here? We see price fail to make a close above previous day's high, but then close below previous day's low. And if you don't know or if you don't understand what I'm saying right now, I would definitely recommend watching the video I made about previous day's high and previous day's low. So we see price closes below previous day's low, and so then we would anticipate previous day's low to be taken out now. But we also have a fair value gap, and as we all know, fair value gap leads to support and price going higher. And whenever we touch a fair value gap and respect it, we most likely not make any form of retracement and deliver right to buy side liquidity. And then we see we have almost equal highs up here, which could be our draw on liquidity. So in that case, we are mostly bullish, but of course, price could take out previous day's low without closing below it and take out previous day's high in that case. So now let's go into the 4-hour. So what do we see on the 4-hour? We also see that price has a fair value gap within here, so that we could use to anticipate higher prices. So we would at least think that price would be able to make a deeper retracement into this 4-hour fair value gap, taking out previous day's low, and then, as I said before, when we are delivering and respecting a fair value gap, we will most likely go up to liquidity. So now that we know we also have bullish bias on the 4-hour, we can go into the 1-hour. So what do we see here on the 1-hour? We see the price is taken out sell side liquidity, but we don't really have any form of PD arrays within here that could help price going higher other than this fair value gap within here. So there aren't really much on the 1 hour. So now we can go into the 15-minute time frame. So here on the 15-minute, what do we see? So on the 15-minute, we have a fair value gap, which could possibly be inversed. And if we want to see price go down to previous day's low, we at least want to see this fair value gap be inversed. So now let's play time through a bit. And we see price inversed this fair value gap, creating an inversion fair value gap. So if we were to take a trade entry, we would enter right at the inversion fair value gap and then target previous day's low. So let's see if price could make any form of retracement. And we see if price does not make a retracement and goes directly to previous day's low. So now, what do we do now? So we could either anticipate a close below previous day's low or higher prices. But on the higher time frame, we see the price is mostly bullish and there is equal highs, which is a great draw on liquidity. So then we would anticipate price going up here. So in that case, if we were to take a trade entry, we would enter maybe at this inversion fair value gap as we touched a high time frame PD array we took out liquidity, and then price would most likely inverse this if we were to go for the higher time frame draw on liquidity. So now let's see if we can inverse this. Let me just speed price up a bit. And right here we see price inverse this. So let's say we were to take a trade entry right here, put our stop loss at this new low we made down here, and then we would target all the way up here, which will make a 6.2 risk reward ratio. So now let's see what happens. And as we see, price almost stops us out, but fails to And then we take out buy side liquidity, which was the high time frame draw on liquidity. So right here we see price has made a consolidation candle because it failed to take out both previous day's high and previous day's low. So what do we do now? We see that price has been mostly bullish, and we also touched a volume imbalance. So in that case, I would anticipate previous day's high to be taken out and also the day before that. So we see we have two clean highs up here. So now the drawn liquidity would be up here. So then we can go into the lower time frame, which in this case is the 4 hour because we're on the daily. So what do we see here? So we see price is delivering from this value gap up here, and we made a retracement down into this value gap. So then what do we anticipate now? So we made the retracement down into this value gap, which we already have touched. So in that case, I would anticipate this high up here to be ran. So now we can go into the 1 hour. What do we have on the 1 hour? So we have this bearish order block, which could help support pricing going lower. But on the higher time frame, our bias is mostly bullish. So in that case, we'll still anticipate price going for the draw on liquidity that we had on the higher time frame. So now let's go into the 15-minute. What do we see on the 15-minute? We see that we have respected the 4 hour value gap because we can see price made this inversion value gap, which is a confirmation for higher prices. And we also see that we created a change in state of delivery down here. So now we already had confirmation on the lower time frame the price is going to go higher. So in that case, we want to be looking for a trade entry. So now we can play price a bit through. So right here we see price makes a retracement down into this value gap. So in that case, we could take a trade entry right here. So we could just buy right there. And then we could put our stop loss at this low and target the draw on liquidity, which would make a 2.65 risk reward ratio. So let's see what happens. And we see price hits our take profit and takes out the draw on liquidity. For the next example, we see price made a close below previous day's low, indicating lower prices down to at least this previous day's low. So in that case, we also have sell side liquidity down here. So I would think price would most likely be able to take our previous day's low and maybe sell side liquidity. So we're bearish on the daily time frame. So now we can go into lower time frame, which in this case is the 4 hour time frame. So what do we see here on the 4 hour? So the 4 hour we have a value gap within here. And this value gap we have to make a large retracement up to it. And if we're extremely bearish, I don't think price should make a retracement up to this value gap. So in that case, I wouldn't use this value gap, and I would just anticipate price going straight for previous day's low or sell side liquidity. So we're also bearish on the 4 hour. So in that case, we can go into the 1 hour. And what do we see here on the 1 hour? So we see the price is delivering from this bearish value gap. And when price is delivering from bearish value gap, it is most likely not to make any form of large retracements and go directly for sell side liquidity. So we're also bearish on the 1 hour. So in that case, we can go into the 15-minute and find a trade entry. And what do we have here on the 15-minute? We see prices delivering from this bearish value gap, but in this case, we will take a trade entry at the AM session. So now we will just wait. So right here, AM session starts. So we see at 8 o'clock, price took out previous day's low, but we didn't really make any form of reversal. So in that case, I anticipate a close below previous day's low and probably also price taking out sell side liquidity. So we see at 10 a.m. we touched this bearish value gap. So in that case, I'll put my stop loss if we had to take a trade entry at this high up here, and then target the sell side liquidity, which will make a 5.2 risk reward ratio. So let's see what happens. So we see price takes out the sell side liquidity, but it really isn't the best trade if you see price almost stop you out. But of course, if you have kept your stop loss at this high, it would work out great, as we took out the sell side liquidity. So that was it for this video, and I hope you liked it. And if you did, please consider liking and subscribing. And if there's anything you didn't understand, or if you have any questions, or if there's any ICT concept that you want to learn more about, just comment down below. And as said in the start of the video, if you'd like to engage with other traders, you can join my Discord. Link in the description is totally free.